In this video, we are going to talk about finance rules school does not teach you. So before starting, please like this video and subscribe to How to Make Money Top 10 Videos channel and ring the bell for our future updates. Personal money is the cornerstone of all success stories. To save you time and effort, our team of experts has compiled a list of the 10 most important financial rules that everyone should follow. If you have a pen and paper, here are 10 of the most important personal finance guidelines. Number 10. College debt isn't 100% necessary. Contrary to popular assumption, a university degree does not require student debt. About 85% of new graduates regret their high school loans and the enormous sums of money they must pay back immediately after graduation. These loans are not usually required to complete your degree. Some universities, like Davidson College in Charlotte, help students avoid debt. Other institutions provide quality education for less than private schools. To save money, you can enroll at a less expensive university, graduate sooner, or start at a junior college. But we don't think everyone should aim for debt-free schooling. In some cases, it may be worth it. A few $1,000 shouldn't stop you from starting a lucrative career. But don't let debt be your main concern as a university student. There are numerous ways to achieve your career goals. Number 9. Guard your health. Without insurance, a hospital visit for an injury like a cracked knee might cost thousands of dollars. If you're having trouble paying your monthly health insurance premiums, what will happen if you end yourself in the emergency room? You'll have to borrow money to pay your medical bills, which will put a strain on those who had other plans for their money. Doesn't seem fair, does it? Get a medical insurance policy as soon as possible if you don't already have one. Taking care of your health might also help you save a lot of money. This includes eating the right foods, maintaining a healthy weight, exercising regularly, and refraining from excessively ingesting alcohol and other addictive substances. You don't want to be sorry later, so take care of your health now. Number 8. Taxes. Taxes are a big subject rarely discussed in class. To stay on the right side of the law, you must comprehend their operation. Learn how to calculate the rate and how much money you'll have left over before you get your first salary or make any sales from your company. This may help you assess whether a job offer will meet your financial needs and how to price your goods or services. Thanks to online calculators, the grunt work is done for you. They'll show you your gross pay, your tax liability, and your wage balance. For example, a $35,000 annual salary in Manhattan nets $26,399 after taxes. Also, keep an eye on the marginal rate, which affects your rise. From $35,000 to $41,000 per year, a monthly increase of $345 rather than $500 is the result. Do your own taxes. There is a lot of misinformation and bad advice out there. Observe. Number 7. Rules of insurance. Consider obtaining life insurance if you have a family member or friend who is financially dependent on your financial stability. It could be a child, a spouse, or a parent who is the subject of the story. If possible, it is recommended to recommend a term policy rather than a life insurance policy because you will be covered whenever the need comes. However, if no one financially depends on you, you should consider canceling the coverage in order to save a significant amount of money. In addition to life insurance, you should consider purchasing protection for your other qualities and possessions. This includes your vehicle, your home, your assets, and your physical health as well. You can also get umbrella insurance, which provides coverage for a variety of policies while also offering a discount if acquired from a single insurer. Take some time to evaluate different insurance rates and, as a result, different features before choosing on a firm to insure with. Number 6. Secrets of credit. Most young people quickly max out their cards. They are thus trapped into a life of debt, paying substantial interest and, in certain cases, late payments. Most people underestimate the value of good credit. This life skill may be recalled from school secrets. 𝐦𝐤𝐬. Your credit score is a critical component of your financial well-being. Aspirations for the future are easier to obtain with solid credit. Credit will be given. To create and maintain credit is essential. Here are some ideas. First, get a card. A credit card may appear to be a mistake, but it is necessary to build credit. Here's one. My boyfriend Kevin, like many others, put off getting a credit card until after college. Isn't that minor? In order to buy a home or automobile, he needed a loan, but his credit wasn't established. With a credit card, banks track your purchases and interest payments. They'll rate your productivity. Your credit score determines the loan amount and interest rate. Pay your bills on time. Pay any money owing today. Number 5. Compound interest. Manipulating interest rates is maybe the world's best kept secret. Time is one thing that every young person has an edge over others. They won't achieve their financial goals immediately, but they will need a strong hand while investing. To succeed, they must now tap into the forces of interest. Young people can amass enormous wealth by saving little amounts of money in a high-interest account over time. This is a great example of the importance of passion. Which of two options, a $3,000 investment or a penny that increased in value every other day, would you choose? Isn't it true that most people would choose option 1? Almost certainly you did too. After 30 days, the second option is worth $10 million. That alone should be enough to urge you to start taking advantage of this fantastic opportunity to expand your fortune right away. Number 4. Budgeting basics. Budgeting is a life skill that is not taught in school. Sadly, not grasping budgeting basics in school may put you at a disadvantage in the workplace. Finances and distinguishing between wants and needs can be difficult to manage. Everyone must be able to arrange a work-based life. This means budgeting for all of your costs while still saving for groceries and emergencies. Budgeting is important, but nobody relishes tracking every time. We expect you to excel at tactical budgeting. Long-term budgeting and planning are required here. Then you can create a budget for the next 6 months based on your monthly spending goals. To avoid overspending, divide the funds across different accounts. You'll remind your list to stay on track. Number 3. Emergency fund. It's possible that you didn't learn about an emergency fund in school. However, you're in luck since we'll be able to show you around. According to recent figures, up to 40% of residents in the United States do not have the finances to cover a $400 emergency expense. This is an unsettling number that only serves to demonstrate how many people underestimate the need of having an emergency fund. What if you were fired from your work today? Would you have had enough cash on hand to cover your expenses? The golden guideline is to have 6 months' worth of expenses saved away somewhere, but we recommend that you make it much more substantial if you can do it. Number 2. SaveSaveSave. It is their goal to teach you in class how to save a considerable amount of money, preferably at least 10% of your income. Nonetheless, let's be honest, this isn't nearly enough to provide for a family throughout retirement. It's not a good idea unless you're making millions of dollars. Many persons who work for a daily wage will have an honest savings percentage that ranges between 25 and 40% of their income. Putting aside 10% of your income is not a waste of time. In fact, it could be an excellent starting point for building your savings muscle, which will allow you to save substantially more and reduce your expenses and unnecessary spending in the long run. Make a financial investment in a bank account instead of wasting your money on that cup of coffee every morning. You will earn a much better rate of interest this way. Number 1. Buying your first home. Almost everyone has heard the proverb, in order to purchase a home, you must save up to 20% of the purchase price as a down payment. If you don't have it, you'll be compelled to purchase private mow insurance, which may be more expensive. However, the financial trade-off between paying a little extra now and building up a significant portion of the 20% deposit may be worth it in the long run. When we examine the macroeconomic fundamentals in the United States during the last decade, we can see that land values have increased but salaries have remained flat. Saving for a 20% down payment is therefore impractical because the value of the home will only increase over the course of time. A minimum of 5 years should be set aside for saving money in a comfortable manner. The downside of this is that you will be pursuing an ever-moving objective as costs continue to rise. I hope you enjoyed our video. Please let us know in the comments area below. Thank you for being with us. Please like, subscribe and turn on the notification bell before leaving. Thank you for watching How to Make Money Top 10 video channel.